Tata Consumer, good set of earnings coming through, revenue growth of 16%, margins have improved. The stock though is coming in for a little bit of profit taking right now. GAIL is the one that I'm looking at this morning. It was up 3% in pre-opening. Right now GAIL is up 4.5%, post a good set of numbers. UBS has a buy with a target price of 250 on GAIL. So keep an eye out on that. Torrent Power is the other one, good set of numbers, 8% higher on Torrent Power this morning. So clearly kicking it out of the park, this one. Torrent Power, its power generation revenues went up 65%. So its core business is doing very well. And that's what the street has liked. Dixon Tech also, that's been a favorite of the market lately. Good up move in the mobile and the EMS segment. On the downside, you have Navin Fluorine that is not looking that good. Big decline in margins and profitability for Navin Fluorine. So that stock is down almost about 2%. Otherwise, for the market, a lot of other stocks in the broader markets that are doing well. The mid-cap index itself is up about 200 odd points. MOIL is up about 5%. You have a couple of other names. Zaggle Prepaid is up in the green. Yes Bank is trending higher as well. ICICI Bank is up 1%. So looking pretty good.
Well, that's right, Sonia. Even Granules India, that stock ended higher in yesterday's trading session. Today, it's building onto those gains. So good move out there. Talking about exchanges, MCX actually is higher with a gain of closer to around 2%. More commodity focus, so that one, in fact, is doing pretty well in this morning's trading session. India Mart, Rima at Wanda said yesterday, yes, the margin picture looked quite good. And that's why the stock ended at the high point of the day. But the details that followed post that weren't very impressive in terms of subscribers as well as guidance going ahead. That's why the entire 5% that India Mart put on in the final hour of trade yesterday, it's given all of that back. That stock, in fact, is down 5.5%. Indus Stars, the stock has seen a big run. It made a low of around 430 rupees. It's bounced back actually off the low point of the day. So good move on that one as well. A few more notable movers. RR Cabel, well, that stock has come for a bit of a knock, down 3% as we speak. So that stock is a little bit lower. Titagarh Rail Systems as well is taking a bit of a knock in today's trading session. So a lot of action we can see from the broader markets. The breadth of the market is very, very good. 4 stocks advancing for 1 stock that's declining. The bulls will take that data point.
Absolutely. And, so it's at least on the indices, it's a bit of a quieter start. But it's not a bad start by any yardstick. So we'll have more stocks, more individual names, etc., which are moving, coming up in just a bit from now. So let's look at a few other names where there is activity and action. Torrent Power, GAIL, Dixon, of course, are the 3 biggest volume-led gainers as well. We mentioned the price change, but these have got the largest volumes. There is Granules as well, which has got very large volumes. I just want to look at what 361 is doing. 361 reported numbers. Remember, Nuvama reported a stellar Q1, wealth management. 361 has also reported a stellar number. Stock's done very well. So that one is up about 1.5%. Jamna Auto is up 4%. Stocks at about 145. HCC has a big performer this year, but another 3% this morning, 56 plus on HCC. Skipper was up 10% yesterday. Skipper is up about 4.5 right now. Balchand Nagar, defense name, 5% higher, 418 on Balchand Nagar Industries. Volumes right out of the gates, things are picking and things will pick up, I'm assuming. But for now, it's a little quiet. Away from the names that I mentioned, not very much going on down the list here. Jyoti Structures and Suvain Pharma, these are all, 4-5% kind of movers. Himmasinka Seed is up about 3%. But beyond that, not very much by way of volumes. On the downside, India Mart, I think we did mention it. India Mart numbers came during the last hour of trade yesterday, and numbers look good. Stocks down 5 though this morning, and look at volumes. It's the top traded loser across the board. Titagarh is the second largest loser on the NSE. Volume-led loser. It's down 5%, and you'll hear from the Titagarh management in a bit from now. Power Grid is down about 1.75%. Sonal mentioned Navin Fluorine, which is down 2%. There is Cochin Shipyard. Angel One is down about 2.5%, nothing large. Castrol is another company you'll hear from a little later on the program. Stocks down about 1.82%, 2% actually. And Idea Forge sold off dramatically yesterday, and Idea Forge is down another 2% this morning. Of course, continued reaction to numbers. Star Health is another sort of earnings set, which we highlighted with Yash earlier. Star Health is starting down 1.6%. So Actually, there is more volume on the downside, even though in terms of just numerically, there are two stocks gaining for every one which is actually going down at this point in time. Let's assess price action and momentum and underlying strength in the markets with Gautam Shah. He's a market master of the day, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time. We had a global sort of guest with us in the morning who looks at Asia Pac, and I was made a comment, and he agreed that if you look at markets around the globe, right, some of the better performing markets, there are signs that momentum is flagging a little bit. Here in India, no real such sort of sense still. We are in a very strong up move, on the market, broader markets and on the Nifty as well. What is your sense, Gautam, and the phase that we are in, and what should we expect in the near to medium term?
Well, good morning, Prashant. I think as we always discuss, domestic liquidity is a revolution. And I think that's decoupled our markets to a lot of things around the world. It started off with decoupling with the Asian markets like China and Hong Kong, which we used to closely track, I think, a decade and a half back. Then it got us decoupled with the Indian rupee, and then pretty much with oil as well, with what has happened in the last 6 to 8 months. And now you had this weakness in the US markets, and despite that, our markets were stubbornly resilient. So I think we are in a good space. I think we remain absolutely solid on the charts. And I do believe how markets handled difficult situations and difficult events is an indication of internal strength. And I think the two major local events that we witnessed, the elections and the budget, and the global events in the form of the two geopolitical events that we saw, and the fact that the Fed delayed its rate cuts, I think all of these factors and how Indian markets handled it was a clear indication that we are still very, very strong on the charts. Had it been a decade back on the budget day, we would have lost about 10%. And I think that's what the domestic liquidity has really done, because it's really become a way of life for a lot of market participants. So a small change in tax, I don't think will have a very great impact on what markets participants do from a longer term perspective. So having said all of that, I think the trajectory is still up. We still see amazing rotation at the marketplace in terms of sectors and in terms of segments. And I do see further upside taking the market towards 25,500. I'm not so keen on where the markets head higher. I think support levels are very important. Until we are safe above support levels, which is the view, I think there is more to go. So pretty much the way the charts are right now, the best is yet to come, and we don't see any major signs of topping out.
Okay, no major signs of topping out. Bullish as always. It's good to see you that way, Gautam. And of course, this has been a market, right? I mean, the kitchen sink has been thrown in the market and it's still sort of emerged on top. But tell me, from here on, if you had to decide on sectors or stocks, right, where do you see any kind of value? I'm asking because it's very hard to find companies with sort of where there's any kind of valuation headroom. What are you looking at on the charts?
Yeah, I think value is a tough word to find in today's market. I think value has moved higher a few notches pretty much with what has happened in the last 6 to 8 months. But so be it. I think what you've seen in the last 2 months is the phenomenal comeback of FMCG and pharma and IT. I think these three sectors are considered defensives, and they have pretty much been the poster boys, of the recent past, and they continue to look rock solid on the charts. So we are actually banking on these three sectors, and I feel that these three sectors should continue to run up significantly, along with metals and chemicals, which I think are at the verge of the next phase of the bull rally. I would also want to add financial services as a basket. I know we keep looking at the bank Nifty, but if you look at the financial services index, which has banks, NBFCs, and insurance companies, I think that's one sector that can do significantly well over the next 1 year. So, these 5, 6, 7 sectors which I just highlighted are not the poster boys' names. It's not the typical railway, defense, real estate, capital goods, where I think we have been recommending profit booking and switching to some of these sectors which are more defensive in nature.
Okay, all right. Hi, Gautam. Good morning. Good to see you in. Just give us the level on the Nifty then. You've given us spoken a lot about sectors. By the end of this year, what are the charts indicating? Where are we headed?
See, I think the last bull market has taught me that you don't discuss too much about the magnitude because, this market can just continue to move higher or rather grind higher. And I still don't think we have seen a blowout in some sense. But in terms of a short-term number, I think 25,500 is a number that we have been working with, and I think we will get there gradually. In terms of a more longer-term number, I think 28,400 on the Nifty is possible. It's not going to happen in a straight line, but gradually we will get there with some corrections along the way. But in terms of support levels, which I think are more important, 24,600 and 24,100 are extremely important. Until the Nifty is above these numbers, I think the market is okay. And I do believe that the Bank Nifty from here will play a very key role. And if the Bank Nifty manages to sustain above levels of 50,000, there is still a very high probability of that index moving about 12 to 15% from here.
In terms of global markets, what are you noticing on the charts? I'm asking because, this has been such an uninterrupted bull market. Ever since COVID played out, we haven't seen any major sell-off, even across the globe, not even a 10% correction. Is that looming around somewhere?
Well, that's the beauty of it. I see a lot of people talking about references of history and references of the past. I don't think you can use anything in history in the last 30 years to say or discuss or to forecast what's happening right now. Having said that, 2003, 2007 bull market saw multiple 10, 12, 15% corrections. But the fact of the matter is 3-4% is the new 10%. And that's probably the reason in the last 1.5 years, you've had these 3-4-5% sweet corrections. They come, they scare you, they make the market healthy, and the markets are back on track. So I think this will continue. India continues to be the poster boy in the global basket. If you look at the top 40, 50 markets in the world, we are still one of the best performing markets. And that's probably the reason FIs cannot ignore India anymore. And that's why the large caps have made a comeback post the election results. And I think that's going to continue. So definitely there are risks in the mid caps and small caps. So you can't go out there and buy anything and everything in mid caps. But I think the top 100 is still looking quite lucrative on the charts.
Okay, all right. Let's talk about a couple of heavier names then. Reliance Industries as well as HDFC Bank. One has been a big outperformer. The other one has been lagging. Well, what are the charts indicating on both these two? Because you put it together, well, it's more than 20% of the index.
Yeah, I think a couple of months back at lower levels, we put out a very bold call on SDFC Bank. And we said that, it was available near the COVID highs. So it was a very clear buy when we looked at the ratio charts. And I do believe that SDFC Bank can do something special over the next 6 to 12 months. In fact, our working target is as high as 2,000. And if that were to happen, the Nifty and Bank Nifty will be up. In fact, if you look at the contribution of ITC or Dr. Reddy's or Bharti, I think many of these index heavyweights have shaped up really well. And I do see a big opportunity in SDFC Bank, even from these levels. On the other hand, in some sense, Reliance has been an underperformer. It's not a favored stock. It's not a path that I'm going. It might do well, but I don't think it's going to create serious alpha. I would still bet on an ITC, which we discussed in our last interaction. And I think there is more juice left there. But within the banks, I think SBI, ICICI, and HDFC, I think these three big banks could potentially lead the market higher from these levels.
Okay, one final question then on the auto stocks. Any thoughts there? Because, they're in the news right now. We have a big IPO coming up on Friday as well, the Ola IPO. Then the two-wheeler companies will once again be in focus. Anything on the charts there?
Not really, Sonia. I think the auto index is looking quite toppish at this point of time. It's just that the market momentum is so strong and therefore they are up. However, I would look at the auto ancillary companies. I think that's a space which I'm betting on for the next 3 years. And I think that's a big opportunity. But talking about opportunity, I think chemicals is one space which we are very seriously looking for the last 1 month. And I think a lot of these top quality chemical stocks could be the serious winners over the next 6 to 12 months. And we've actually recommended some at Goldilocks recently.
Gautam, the Bank of Japan decision is out. There is a finally, they've raised policy rate to 0.25%. I don't know after, I think how many years, but they've finally effected a hike. I mean, it's Japan going one way, the world going the other, right? I mean, you've got the rest of the world waiting for rate cuts to start. I mean, the US and Europe, here in India, other emerging markets, but in Japan, I mean, there has been this wait that they will actually start to increase interest rates because inflation after 25, 30 years is finally So, it did finally cross that 2-3% kind of levels. Any thoughts at all, Gautam, if you track this stuff or you've been watching the USD JPY big moves lately?
Well, not closely enough, but I do believe that every country has its own dynamics, and I don't think it impacts Indian markets so much. And I think the Japanese market also went to lifetime highs after almost 25 years of staying in a grind. So in that sense, I think it's great for that country. But I think Indian markets will be looking at what the Fed does. And I think in the September-October meeting, pretty much the consensus is that the rate cuts are coming. And I think on account of that, you could have financial services trying to discount that. So that's probably the reason I keep saying that financial services could be a theme to watch for the next 3 to 6 months.
Okay.
And we don't have sort of exact figures, and it'll be interesting to get that. One of the ways why Japan is important is because so much of Japanese pension money, local money, retail money, has essentially gone out of Japan in other markets around the world looking for yield. And that is essentially what is sort of known as, one sort of representation of the carry trade. It typically is referred to foreigners buying in Japan and buying assets around higher yielding assets around the world. But it's also true that Japanese sort of money, local retail money in Japan is flooded across the world. And in India as well, I remember a global city report saying that Japanese money is a big part of the foreign inflow which has been coming to India through various structures, etc. But that has been happening over a period of time. And I think the return differentials are still very, very high compared to, especially now with the sharp outperformance that India, etc., has seen. But we'll track this one, get you some reactions over the next couple of hours. I think first rate hike after some time, policy rate increase at 0.25%. The newspaper Nikkei had reported that a hike is coming, and it has really indeed come through. Sonia.
Okay, well, let's do one thing. Let's talk about Dixon Technologies, because that really is the stock of the moment right now. The company has reported a very strong performance yet again in Q1, with the earnings coming above street estimates. It's their mobile and EMS division revenue contribution which has seen a very big surge, but their consumer electronics and appliances revenue contribution has decreased. To discuss more on this, we have Saurabh Gupta, the CFO of Dixon Technologies, who joins us now. Saurabh, thanks a lot for joining in. It was a very strong performance in the mobile segment, and because of which your numbers are well above the street estimates. I just wanted to understand, in the mobile and EMS division, your revenue contribution is now 79%. Do you hope to take it up further, and what kind of sustainable growth rate do you see in this business on the top line?
Yeah, thank you, Sonia. Thank you for having me. So as mentioned multiple times, Sonia, I think so mobile is the largest trigger for our growth because that is the largest opportunity pool as compared to all the other verticals that we have. I think so in the next couple of years, I think so IT will start playing a bigger role. They will be, of course, they will be the next growth engine for us after mobiles, but it will take us another 12 to 15 months for that. But clearly, I see mobile contributing a larger portion. But even the other verticals like telecom, IT hardware going forward will start contributing a meaningful number.
Okay, so in terms of a growth rate, for the mobile business, I just want to understand in FY25 and FY26, what kind of, do you have any kind of targets, particularly for this segment?
So last year we did almost 6.7 million smartphones. This year, we are targeting almost 28 to 30 million smartphones. Our acquisition of iSmartU is also in the final stages of getting completed. We got the CCI approval, and in the next 1 week or so, we will complete all other formalities and start consolidating those financials. So 25 million is what we expect outside of iSmartU, which is for brands like ITEL, Techno, and Infinix, and 5 million we expect through ITEL brands. So clearly, we will have the largest capacity in India of almost 45 million smartphones, and then 10 million gets added through iSmartU. So we'll have one of the largest capacity, and almost we have 55 to 60% of the opportunity pool which is available in India. So clearly, we have created a large capacity. Now the idea is to go deep into both manufacturing, deepen the level of manufacturing, get into components, precision components, mechanicals. Also, we have already finalized a technology partner on the display. So the idea is to create more technical skill set around that, create more competitive moat, and acquire that competitive strength by getting deep into components.
Okay, hi Saurav, good morning, good to see you again. So 28 to 30 million for this year, and I think next year you're talking about 40 million in the mobiles business, right?
Yeah, broadly it should be somewhere around 40 odd million. Yeah.
Okay, so mobile's the one that's going to be driving, but as you mentioned briefly, that the IT components of products, that's going to be the next driver of growth. But I think majority of it will come in FY26. In the past, you've hinted that the TAM, the target market, could be approximately 50,000 crores as well. How do you see revenue shape up, say in FY26? What kind of a revenue number can IT products report for you?
Yeah, so Nigel, clearly IT hardware is a 10 billion opportunity in India. And of course, the production value should be somewhere around 50 to 55,000 odd crores. And clearly, like the way we have always captured a large market share in other categories, our aim is always to take a 20-25% market share over a period of time. So what we have committed to the government is revenues of almost 48,000 crores over a period of 6 years. Now, if you look at, we have already closed contracts with Lenovo and Acer. Acer, we are already manufacturing, and Lenovo, we start manufacturing by Q3. Also, we are also in the final stages of closing with 2 large brands. In fact, those brands are already on board. We are just concluding the final agreements with them. And those brands we start manufacturing by next financial year in our campus in Chennai. So practically, we have now all the 4 large global brands out of the 5 global brands. So it will be a large revenue driver for us going forward. And clearly, next year, we can hope to do our revenues of anywhere between 2.5 to 4,000 odd crores, depending on what time we are able to start in our Chennai campus.
I think the street is working with a number closer to around 4,000 crores. You think that's gettable for FY26?
Yeah, broadly it should be in the range of, I think, so 3,500. That we're slightly more confident on that. But yeah, if we stretch ourselves and if we are able to roll out our campus slightly early, yeah, we can stretch it to 4,000. Yeah.
Got it. Saurabh, so 2 more brands you've almost have got signed up, right? Something you'd hinted earlier as well. So we should have an announcement soon, this quarter?
Yeah, you should have an announcement soon on that, yeah.
Okay, I got it. What about, something we've sort of discussed earlier, industrial sort of EMS segment on the automotive side, etc. Where are plans there, and by when can we see things being fructified?
Yeah, so if you look at our strategy of setting up campus in Chennai, it's mainly aligned towards getting into PCBAs for industrial and automotives, because that's where the large hub for electronics is, for automotive sector is. So we are in discussion with a large brand, and also we are in some kind of discussions on the automotive side. So my sense, by next financial year, we should have some numbers coming in from this segment as well. So we have already, as I mentioned, we have created infrastructure. We are building on a team for that, and we think it's a core for us, and we'll definitely have a big crack on it.
When do you start? When do you start production, Saurabh?
Hopefully in the next 12 months, and anywhere with 9 to 12 months, hopefully.
And that tie-up with a major brand, that should happen this quarter?
It will take some time, but the discussions are going on very well, yeah.
Okay, I got it. So just talk to us a little bit about overall margins as well. How's the environment on the sort of cost side, pricing, etc. looking? And what should we expect for FY25 overall?
Yes, broadly, I think so. Our numbers will only get better from here on account of that acquisition, which will now start getting consolidated. And also, if you look at Q2 is always seasonally a better quarter as compared to Q1. And a lot of our customers in mobiles are now ramped up, and the numbers will only increase from here ahead of the festive season. So we expect better margins in Q2. Overall, I think so we should be somewhere around 4% kind of levels. And then the strategy to get into more backward integration will only help us improve our margins year on year, because all this component play is very highly accretive on margins, even though they may have a lower asset turns, but yeah, they're very positive. They'll have positively have an impact on the margins here.
Okay, so sort of just one question before we let you go. Any plans to exit the lighting segment, or do you believe that will grow? Because currently it's quite small.
No, Nigel, I think so the worst is behind us. We had a tough last 12, 15 months. There was a lot of pricing erosion which has happened in this industry. But now I think so we are getting our whole thing back on this. So we are expanding into new product categories of floodlights, street lights, professional lighting. We're getting into some premium product categories. We're getting into backward integration. And if you look at the revenues for Q1, It has actually grown by 15% as against Q4. And we are also working on some export orders. So clearly, my sense is the worst is behind us. The pricing has kind of stabilized now. And it's an important play for us. It's an ODM business for us with 7 to 7.5% kind of margins. So we'll continue to, there's no plan to exit out of that business here.
Thanks for clarifying that and wish you well for the remainder of this quarter. Congratulations on a rather good showing. The stock has seen a big run, but it continues to move up because of the positive commentary that you'll have given on the con call as well as on this interview. Well, let's focus on the next company, Titagarh Rail Systems. The stock is a little bit under pressure. First quarter was a little bit weakish. Lower execution of passenger wagons impacted the overall numbers. Mr. Umesh Chaudhary, the Vice Chairman as well as the MD of the company, joins us on the show. Hi, Mr. Chaudhary. Good to having you on the show. Thanks a lot for joining in. Well, what went on in the first quarter? What was the execution run rate? I recall you were talking about around 1,000 wagons per month. What was it in the first quarter and how do you see it shaping up?
You see, as far as the first quarter is concerned, we did about a lesser number of wagons. We did close to 2,100 wagons. That's an average of 700 wagons. If you compare it to the year-on-year quarter, we were at about, we were better than that, about 10%, 12% more than that. But the first quarter was adversely impacted because of the severe heat wave, the elections, and, there was huge absenteeism. And normally the first quarter is traditionally in our industry, you can see in years is a slower quarter compared to the pickup that happens in the further quarters. So we are very confident that we'll be able to make up this in the coming 3 quarters and reach our target. We've always projected that we'll do about 10 to 11,000 wagons this year, and we should be in target to do that.
Okay, 10 to 11,000 wagons this year. That's in FY25?
Yeah.
Okay, and in terms of, those are the passenger deliveries that you're talking about?
No, these are the freight wagons. As far as the passenger, the passenger trains are concerned, which is the PRS segment, we had told in March also. If you see really that the revenue that we had on a year-on-year comparison is about 100 crore less in passenger, that is primarily because the Pune metro contract was completed, the execution was completed, and the Bangalore and the Surat, Ahmedabad and the Vande Bharat actually is. So Bangalore, for example, the production started last month, and we'll start the first train of the Bangalore metro will be delivered in Q2. So, this is going to ramp up really from Q2 onwards. I would say more than Q2, Q3 onwards. And, we are going to get to capacity as far as the passenger rail segment in FY26 when Vande Bharat also starts. So this is a business which is new, which is picking up. And I think we are very well on track to pick up this business.
So, in the passenger business, your margins currently are at around 6.1% to be precise. But earlier you had targeted for an exit margin of 10% in FY25. Are you on track to doing that? And will that be largely from the passenger segment?
Absolutely. So it's all a question of operating leverage. So the fixed cost in a passenger business is quite substantial. We have design centers and we have like a very, very large scale infrastructure. So obviously with a 60 crore revenue, the margins come under pressure. But going forward, even for the year, we would be, for the PRS alone, the targeted margin should not be a challenge for us to achieve.
Okay, the start of the year has been a little bit soft, as you said, because of severe heat wave, elections and the likes. But for the year, what kind of a revenue number are you looking at? And the consolidated margins as well will be at around 10%, right, for the year? That's FY25. In FY26, I think you've hinted it goes to 12-13%.
So as far as the passenger segment is concerned, you're right. As far as the freight segment is concerned, what we had always said is that the margins are likely to be around 12%. That is what we have always guided. As far as the revenue is concerned, I just mentioned we have a strong order book. We have an order book of 20,000 wagons in the freight. We have very strong order books in the passenger. So we'll be able to ramp up the freight in these next 3 quarters. And the passenger is a much more, I would say, gradual ramp up. It will continue from Q2 onwards. But we'll really see the big impact of the passenger in FY26.
Okay, all right. There's a 55,000 crores worth of ordering pipeline. I think we've discussed this in the past. How much can you garner, sir?
So these are tender-oriented business. For me to give a number to that is going to be very
Okay,
speculative.
what's your normal hit rate?
Yeah, so that's what I was saying. Normally in the freight side, we've always had about a 25% market share. So we will continue to keep our market share on the freight side. As far as the passenger is concerned, so if you really look at FY24, we did an average of maybe 3 cars per month. We will reach close to 15 cars per month by end of FY25. And the capacity that we are building, that FY26, FY27, 28, the ultimate target is to reach 72 cars per month. So that is the kind of delta that we are talking about, from 3 cars per month on an average to 70 cars per month in maybe 4 years.
Okay, all right, Mr. Chaudhary, appreciate you joining in and giving us a fair sense of why the past quarter was weak and why you're optimistic about the future from here on as well. Wish you well for the second quarter and for the remainder of this year as well. For the time being, though, we'll slip into a short break. You come back, we'll get a chat going with Castrol. A lot of focus on that particular company. We'll try to get in more out of the management. Stay with us.
Welcome back. You've got the market, which is up 30 points, and 24,890 is where we're at right now. Overall market breadth is positive. 1,400 stocks are up, 900 stocks are lower. That's, the overall picture out there. And there is a lot happening as far as the broader market goes. I mean, the big gainers are volume-led gainers are GAIL. There is Torrent Power, Suvain Pharma, Skipper. There is Stanley, which is the furniture maker, with recent listing 6% higher. Thyrocare is up 6%. Honasa is up 5%. So things have really picked up with lots of new names in the mix as compared to when we started early on. I just want to highlight what's happening on the Bombay Stock Exchange, BSE, the stock. It's up 6% right now. Rajesh Baheti alluded to this, not directly with regards to what stocks may do, but the fact is that, essentially SEBI is telling exchanges that you have to choose one weekly option contract on one index. NSE has got 4. BSE has got 2. BSE has got the BankX and the Sensex. The NSE has got the Nifty, Nifty Bank, Midcap, Fin Nifty. And they got to choose one, let go of the other 3. BSE has got to keep 1. The point is volumes, without going into the exact numbers, NSE in terms of weekly options will have the overwhelming majority of the volume share. And, you're essentially now telling NSE that you can only have 1. So naturally, the leader's got more to lose. And because both will only have 1 weekly option contract, some of this volume which was happening on the NSE and some of the other weekly option contracts as well, should move on to the BSE as well. That is essentially the bet that markets are making. What remains to be seen, what we don't know yet, is that will there be a big impact on overall market volumes? Because if that is the case, some of the benefit, BSE-specific benefit, may be muted. But this is, of course, all in the realm of thinking and expectation, because we don't even have the final rules right now. This is based off the consultation paper which SEBI put out yesterday. More on this story with the exchange themselves, hopefully, through the course of the day. Castrol India is the next company that we are speaking with. Stock's done phenomenally well this year. But the performance in the second quarter was a bit muted. Low single-digit growth in revenue and profit margins were also kind of flattish. We have Mr. Sandeep Sangwan, Managing Director at Castrol India, to talk more about this. Mr. Sangwan, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So Q1 has been, this quarter has been muted. Even H1 overall has not been all that great. Could you give us an indication of what we should expect for the full year in terms of volume and value growth, FY25?
Yeah, first of all, I think thanks for having me on your channel, Prashant. And let me give you a perspective. I think we've delivered a 5% growth in revenue in the second quarter and a 3% rise in PBT on the back of continued investments in our brands. We launched the Shah Rukh Khan campaign on Castrol Edge. And if I also compare it to what we've done historically, is our top line growth used to be in the region of 2-3%. And I think what we're trying to do is balance out top line growth and bottom line growth. And we're very happy with the top line growth, volume and revenue profile that we're building now. Okay, and our volumes have been pretty much in the same level as revenue growth. And the other thing is we continue to invest behind our brands, launch new products. For example, in second quarter, we launched Castrol Edge portfolio for SUVs, for hybrids and European cars. And this is the top performance product in our cars portfolio globally. So muted depends on which perspective you see it from. I think what we are focused on is now driving top line growth balanced with maintaining our margins. That's where we are.
So can you give us the exact number, Sandeep? What was the volume growth that you did in Q1? And for the rest of the fiscal, what is the kind of average volume growth that you are expecting?
So I think our volume has grown in the level of 5-6%. That's the core business, lubricants. And I think as far as the full year is concerned, we want to grow a couple of points ahead of the market. Okay, and this market grows at about 4-5%. And I don't know where the volume will end at the year end, but our intent is to drive top line growth through volume growth.
So you're saying that there is no scope of double-digit growth in the lubricants industry, not just for your own company, but even for the industry overall this year?
I think depends on where we play and where our competitors or other colleagues in the industry play. And I think we can get to double-digit growth levels, but a lot will depend on diversification also. But the core lubricants business will continue growing at about 5-6%. That's our outlook. And if we can beat that category growth and then add on some revenues on top from playing in adjacencies, I think that can get us to a much higher volume growth profile. Just to share an example, we've launched auto care range of products last year, which are now available in 45,000 outlets. We're trying to scale that business. We've got good response. We have a portfolio of 5-6 products in that auto care range now, which will continue building. So there are additional levers of growth which will come in as we look at the future.
Okay, all right. Hi, Sandeep. You briefly mentioned that Shah Rukh Khan's on board as well. That would mean higher advertising spends. So as a percentage of sales, what was it? And where does it settle at for the coming year? And, putting that into context, what does it do to margins? 22 to 25% is what you've been talking about. Will you be closer to the lower or the higher end of it?
So let me start with margins first. We've maintained our margins at about 23% in the second quarter also. And what we said is in some quarters it's been 22 in 23, but we are able to maintain those margins at 23, 24% levels. Okay, that's one thing. Yes, advertisement expenses will be higher, and they've been higher by about 16% in the first half of this year. But that's a part of the strategy. It's not something that we want to give up. Typically, we invest about 4 to 5% of our revenue in our brand investments, and that will continue going forward. If anything, we may continue investing more. But Castrol has been built. It's a brand which is loved by Indian consumers and customers for more than 115 years in the country. And we have all the intent to continue building that brand, supported with innovation by bringing new products for our customers and consumers.
Okay, all right. Sandeep, the street got very, very excited about the data center opportunity. We had the management of Gulf Oil who said, given the entire matrix and the entire pie, it's not such a big opportunity. Though the stock market is quite bullish that Castrol has a big opportunity out there. Could you give us your reading of this? How big is the data center opportunity for a company like Castrol, and how do you look at scaling that up?
Yeah, so I think let me touch on that. First of all, we've called out globally, data center thermal management is a big play for Castrol. And globally, we're investing about 500 crores. That was announced in R&D facilities in our parent company in UK, to which we have access. The way we see it is data center market is going to grow, in India and globally also. It's a function of what cooling technologies data centers adopt. Right now, most of the data centers use something called air cooling or HVAC systems, traditional systems. But I think as the computing power demand grows and we need faster processors, cooling requirements will grow. And Castrol as R&D, we are investing in technologies like immersion cooling, which can give us opportunities in that space. So that's where I think it's still in development stages. We have certain tests running with customers. We've tied up with global players in data centers who design and develop data centers. So we see this as an opportunity area, and that's the perspective we're coming from.
Mr. Sangwan, so you're saying that the parent already has a product, is it?
Yeah, we have liquid cooling products for data centers, which are already available. Yeah, for immersion.
And this is already being used, immersion cooling? Your product is already in use?
So we're working with some of the big data center players in terms of testing and piloting these. I cannot say anything more than that, but we have a data center cooling product which is available.
Because in India, the market is about only 1,000 megawatt, right? I mean, it's expected to grow rapidly because a lot of capacity, etc., is coming. A lot of big players, conglomerates, etc., are coming in very fast. But this is are you saying this is in testing stage or this is a settled technology now? I mean, it's much more efficient than air cooling.
Yeah, it is much more efficient because the energy consumption is much lower and it's far more efficient in terms of space utilization also. But as I said, we're doing testing with some of the big customers, and we want to continue developing this further.
By when can we see the technology? You said you have access to this. By when can you get that technology here in Castrol? I mean, for Castrol? Yeah.
So I think as we kind of further proof of concepts get verified, depending on customer requirements and customer businesses, we will be able to bring it in. I think to say which time is very difficult for me. I think it again depends on how the tests and various programs that we have with customers develop over the next few months and years.
You know, we had the Gulf Oil management and they gave us the total, I mean, in terms of volumes, right? If you project data center capacity, say 2,000 megawatt, I mean, you say all of it becomes this immersion technology. Even then, as a percentage of total volume sold, it is minuscule. But I don't know if that is the right way to look at it. I just wanted your perspective. Could it be a high margin product? So it's in terms of share of volume, it could be low, but share of profit could be high. I don't know what the internal thinking is, Mr. Sangwan.
So, first of all, I think you keep referring to Gulf. It's their view, and I wouldn't like to comment on that. It's for them to judge. As far as we are concerned, we've called it out globally as one of our plays for the future, and we believe in this and will continue working on this as an opportunity area.
Okay, we'd love to get more details as you're not ready to share those with us. So maybe next time, and we'll have more updates on this one. Really appreciate it, answering and taking all those questions. Thank you very much for joining us, Mr. Sangwan. And good luck for the underlying business as well as you go through the rest of the financial year. We'll take a quick commercial break here. Okay, I think what we'll do is we'll look at trades, individual trades. Mitesh is with us. Mitesh, your thoughts on what we're seeing in terms of price action, 50 points higher, but actually start with BSE and what the stock is seeing. Big 7-8% move right now.
So, Prashant, I think, BSE, in fact, has done a big correction and is now reversing. My sense is starting an uptrend with a minimum target of 2770 to about 2860, and in a good case, 3000. So, I think the stock is a good bet for people who are getting, wanting to get into a swing trade. I think this looks good to me.
Okay, well, what about individual stocks?
I have a buy on NCC with a stop at about 340. Target of 380 can be looked at. Good breakout. It's a cash stock, though, I think, but it's giving a good breakout. So I would recommend a buy here. And the other one is a buy on, a buy on Bajaj Auto with a stop at about 95.75 and a target of 97.60.
Okay, let's do one thing. Let's take a quick commercial break. A spotlight on the top stocks on the move on the other side. Stay with us. All right, Torrent Power is one stock in focus today. So Vivek is here to tell us why you need to watch out for that one. Vivek, over to you.
Well, that's right. So Torrent Power, like we highlighted earlier, very strong year-on-year growth as far as, company was concerned. Generation volumes are picked up quite significantly. Along with that, remember, the gas power plants that the company has, both, Sujin, is something, that actually operated under Section 11. Aided by strong summer, you actually saw significant offtake coming in over there as well. So strong merchant sales spread, aided by Section 11 and strong power demand, actually led to a very good quarter as far as Torrent Power is concerned for Q1. Revenues higher by 23.5% on a year-on-year basis. EBITDA jumped up 57%. Margins 400 basis points expansion. Profitability on the back of that higher by 87%. Thermal PLF, something that has jumped up quite significantly on a year-on-year basis, 60.4%, versus last year it was just around 39.6%. Now, generation revenues up 65% on a year-on-year basis. On the back of that, company sales increased contribution from merchant power sales and also increased contribution from licensed distribution business. Along with that, the company also gave the capex guidance, for the distribution business, for thermal capacity addition, and also, they're quite confident in terms of scaling up the pump storage plant as far as hydrogen is concerned. All of that keeping the stock active in the session today.
Okay, all right, Vivek, thank you very much for that. India Mart reported numbers in the last hour yesterday. Let's revisit that. Stock's down today. Rima's got more. Rima.
Thanks so much for that. So yesterday, in the last 1 hour, when India Mart reported numbers, the stock rallied on the back of a very strong margin expansion. But the details which have come out post-market close are a bit concerning. One, the paid subscriber growth has been muted. In the current quarter, it stands at 1,500 roughly paid subscriber addition versus about 2,700 in the prior quarter. Secondly, collections growth at 14% is lower than analyst estimates. Nomura was at 19%. Third, the traffic has dipped to 267 million, lower than what we had in the prior quarter. And fourth, this sharp margin expansion to levels of 36.1% was aided by a near 300 basis points cut in the company's sales and marketing expense. And the company clarified that some of this is going to reverse because the company has hired people in June and July. According to them, EBITDA margins, they're targeting close to about 33%. Nomura has come out with a note. They're saying they're also concerned about the weak increase in business inquiries over the last 5 years. So from FY19 to FY24, business inquiries have gone up only 5%. And therefore, getting back, increasing your subscriber addition is going to be a challenge. They're neutral on the stock with a target price of 25.20. But Ambit believes that the current weakness is transient. It's the top pick in the online classified space because remember, India Mart is also, the market leader when it comes to B2B, SMB. It's like a B2B platform for SMBs as well as, small to medium-sized businesses. And therefore, Ambit is very bullish still on India Mart. Back to you.
Okay, thanks a lot, Rima, for that. Let's take a short commercial break. On the other side, Lata will connect with Nitin Agarwal of Motilal Oswal Financial Services and Santanu Chakrabarti of BNP Paribas to decode the banking and the NBFC sector in Q1.
Hello and welcome. It's the economy today is earnings analysis time, especially of the banking and financial sector. Most of the results are in, except the big one, SBI, BOB is due today. But among the banks that have come, clearly there is a scar because of the fight for deposits. We have seen a reduction in deposit growth trailing advances growth, a fall in CASA and problems of credit being far ahead of deposits and therefore a credit-deposit mismatch, something the Reserve Bank has been pointing out. There are also small problems of asset quality emerging. It's usually a first quarter phenomenon, but perhaps some of it could prevail, could continue. Let's ask the experts. Joining me now to discuss the banking results so far, Shantanu Chakrabarti, the India analyst, banking and finance at BNP Paribas, and Nitin Agarwal, the head of banking and finance analysis, institutional equities at MOFSL, Motilal Oswal. Gentlemen, thank you very much indeed for your time. Shantanu, I'll begin with the predictable one, ICICI and HDFC Bank. ICICI Bank, obviously, excellent results. But now, would you say price-wise, the advantage that it has shown in its results is kind of covered? Would you rate them equally, ICICI and HDFC Bank?
We have a higher upside and a higher preference for HDFC Bank. But we just put out a very detailed deep dive report on ICICI Bank a couple of weeks back, where we argued that it's time that now we start thinking of this as a 3 times price to book bank at the core level. Because what I tried to demonstrate out there and something that we have been seeing in action is currently ICICI Bank has what can be considered the greatest privilege in Indian banking, which is essentially adjusted for the size of the retail franchise and the overall operating cost and scale, the benefit of cheapest raw material. We tend to often think of raw material only in terms of cost of funds, but we have to load what yield is possible on the portfolio and, essentially what kind of operating costs are loaded onto it. And once you figure that out, you'll see that ICICI Bank has the privilege of not having to take any major risks, still maintain and gain market share, which is perhaps the biggest edge. So as far as upside goes, therefore, we have a small re-rating still due, nearly not as dramatic as what we perhaps have for HDFC. But in some sense, it is the most worry-free bank to own and less susceptible to quarterly volatility than any of the other names. Okay. So to that extent, it remains our second most.
Shantanu, ICICI is trading at 2.86 and you're saying we should start looking at it as a 3 times to book stock. Yeah. One more question before I get to Nitin. What's your sense about when HDFC Bank will be able to get over its merger pain? Do you think it gets back to 3, say, in 2 years' time? What's the expectation from that stock?
HDFC's recovery trajectory has become highly dependent on what happens to overall system CASA. So in some sense, the monetary and liquidity conditions out there. So, if rate cuts are delayed, things like HDFC and Axis suffer a lot more than ICICI. If rate cuts happen early and there's a pickup in liquidity and monetary conditions and therefore current account, savings account money within the system coming off the low base that it is, its optimization of the entire liability side and therefore margins and ROA plays out earlier. So, we have very little doubt that, over a period of time, this normalization to about 2% ROA and 17% ROE at the core level will happen for HDFC Bank. But it's the timing is exquisitely dependent on the timing of rate cuts, how easily net durable liquidity goes into a surplus, and of course, at what point the gap between FD and SAR rates reduced to the point that savings account money can start picking up again.
Okay. Fair point. I mean, those are all extremely extraneous factors when you're going to see liquidity adequate. Depends on how fast the government spends money. And as if we were all thinking that the Fed is going to cut and therefore there is a cut on the corner, BOJ has now raised. So we really don't know which way the Reserve Bank will go or how long it will take. Nitin Agarwal, thank you very much for your patience. Let me come to the next 2 set of banks. We did ICICI and HDFC Bank. You can quickly tell me your position there, but more importantly, when it comes to Axis and Kotak, do you think that it's in buy zone?
Yeah, so see, both Axis and Kotak, there are one of the other things that is limiting their performance. If you look at Axis, this quarter, the business numbers were slightly modest, more modest, and wherein the deposit growth was like marginally negative. And that led to a slight rise in the CD ratio. And that's something wherein the bank is engaging with the RBI and has submitted a plan to improve things over the year. So that is an overhang on how the growth rate overall will be. And I think Street is factoring that in, and slight moderation in growth estimates have happened for Axis. So that resulted in the subdued reaction or some decline in the stock after the results. And Kotak, I will say, on the other hand, business numbers were relatively better, especially on the loan side, wherein the new management has delivered well. On the lending side, they have shown some bit of aggression and tried to compensate for the limitation that they have on the consumer side, especially after the RBI restrictions. So for the full year, we are still expecting loan growth to be higher for Kotak vis-a-vis Axis. And gradually, as you see some limitations going away, which is going to take time. But in the interim, bank anyway is making pretty healthy ROA. Our estimates are like well above 2, beyond 2. Like bank is already making close to 2.4 ROA. So if it sustains that level of profitability, which we expect by and large to be the case, then I think you can look at some moderate returns to come through from Kotak Bank.
Certainly outstanding.
We anyway have neutral rating on both the stocks.
Okay, what's your pecking order in the Nifty, in the banks, in the Nifty itself, Nitin?
We have been more positive on ICICI, SBI, HDFC Bank amongst the large names. And amongst the mid-size, we have been picking Federal Bank, which is outside Nifty, of course.
Okay, got it. Shantanu, to come back to you, what would your mid-cap bank preferences be? At least banks like AU Finance seem to have stood out.
Right, and that is our preferred mid-cap play. Now, having said that, Lata, I'm probably a little less constructive on the name that I used to be earlier. It's still, on a relative basis, amongst our mid-cap bank coverage, the best play. But I'm somewhat less than pleased about their margin defense and growth in core segments in the last 2 years. First quarter has shown on margin defense and as well as growth
AU Finance. You're speaking about AU Finance? Okay.
Right. That's been a little weak. I mean, typically people buy this bank because they essentially get almost an NBFC-esque franchise within those core segments with a low penetration argument to go in their geography. Right, that's one of the key reasons to own that bank, and that should have given it greater pricing power in an admittedly competitive environment. But perhaps the fact that the yields on either of those segments or their growth has kind of been a little lackluster in the last 2 years. I mean, sure, there's some improvement in the current quarter, has reduced my enthusiasm in the near term a little bit, especially given that it's not a cheap bank in that context, right? So, the performance standards remain a little higher than the typical mid-sized bank, which trades at 1.3, 1.4 times.
Okay, fair point. Nitin, to you, the public sector banks. I mean, Punjab National Bank stunned us yesterday when they said that they had guided for a credit cost of 100 bips, and now they're reducing it to 50 bips. I mean, that's dramatic. What in the PSU banks impresses you? Do you still think that they have this high provisioning base, which might give them an advantage on credit cost, on lowering credit cost and increasing profit?
Yeah, clearly, like PNB numbers were pretty strong across all the fronts. Even on the business growth side, like we did see a 5% sequential growth on advances from the bank. And specific to your question on the asset quality and provisioning, I think PSUs comparatively are doing a lot better. If you see, like all the banks, private banks have all come through with their results. And in general, we have seen either a status quo or a rise in credit cost across banks. And PSUs, on the other hand, is either a status quo or an improvement. And more likely it is an improvement rather than a status quo across banks. And which is where PSUs over the year are relatively better placed to deliver a stronger earnings for FY25. If I look at our estimates also, we have did some moderation across many private banks, and even the loan growth has seen a cut. While PSUs, because their credit cost is holding up very nicely, and in fact, it is moderating down. Like all the three banks which have come so far, Canara, Indian Bank, PNB, they've all reported a lower provisioning number than what we estimated. And if this trend goes through, and most of these banks are indicating a sustained trajectory on this front, while ECL provisioning is something that one will need to watch out as RBI comes up with the filing guidelines. But more or less, like these banks are well placed to deliver a high teens earning growth for FY25.
Okay. Yeah, I agree. Expected credit loss will take it out on PSU banks more. The private banks seem to be more prepared for it. But you still have only a neutral on PNB, Nitin. You were not impressed by the higher than expected, credit cost, or rather lower than expected credit cost guidance?
No, yes, we have, in terms of rating, yes, we have a neutral, but we raised target to 135 on the bank. Okay. We were at 130 earlier, which we raised after these results. Okay.
Shantanu, now to come to the NBFCs, even the mighty Bajaj Finance showed some trouble of bad loans. And, it trades at very expensive valuation. So will you take away something from it because of that, or do you think that it is seasonal?
Right. So in Bajaj Finance, what is quite interesting is now the narrative has moved along to margins and credit costs from 165 going to something like 185, 190 basis points. And of course, that means that even with 30% kind of loan growth for the full year, you end up with earnings growth, which is high teens, nearing 20%, if not touching it. And on that, we are making an argument, essentially, the street is, that a 24p for this is high. Now, if we put things in context, we'll realize that once rates start to come down, the margin mean reversion is nearly automatic. So the only meaningful thing to worry about from these results is essentially credit quality. Now, on credit quality, we need to drill down a little further. If we see, we'll see that the most challenges seem to be coming from B2C rural. And there, frankly, Lata, my sense is that Bajaj Finance doesn't have the kind of right to win within B2C rural, our research opinion, as it does within, say, B2C urban, which has been, the data-heavy specialization area of Bajaj Finance. And therefore, I mean, if I look at the history of Bajaj Finance has made the most number of experiments in terms of products. At points of time, it has done things like equipment financing. And everything that has not worked, they have been very nimble to kind of rationalize. And that's what makes it the powerhouse that it is today. Perhaps the B2C rural side of the business, large parts of it may not turn out to be a very successful experiment. But if you put in context what the rest of the business is growing at, it dwindles into a very small problem very soon. And again, the long-term earnings growth should track whatever long-term asset growth is going to be in this business. And in that context, the PE is about 30% lower than what the sustainable earnings growth probably is for the next 3 to 5 years.
Okay, so you're betting really on the corporate governance and the intelligence of the company to move out of what's not working. Very quickly, absolutely out of time, Nitin, but what are your mid-cap bets in the NBFC space?
So we continue to prefer vehicle financiers in NBFC space, wherein we believe that growth rates are going to sustain at a healthy level, asset quality performance is on track. And as the rate cut cycle comes through, these banks, these NBFCs will see some recovery in margins also. So which is where we like Chola, Shriram, PNB Housing. And so these are the three NBFC plays like we like.
Okay. Well, we do need a much longer segment to discuss the entire NBFC space as well. Gentlemen, thank you very much for whetting our appetite. We will touch base with you when the entire result season is over. We have to wrap up on Bazaar on a fairly positive note, actually. They will all benefit once the rate cutting cycle starts. So even if the BFSI space is a bit of an underperformer, it's good to keep waiting there. Wrap up on Bazaar. Short past is coming up.